Hello, listeners, and welcome back to the Deep Dive.
Great to be here.
Our job, as always, is to cut through the noise, digging into the Seoul Economic Daily's financial pages to bring you what really matters.
We want to make sense of these complex market shifts and policy moves for you.
And this week, well, there's a lot brewing. We're seeing some real anxiety around new loan rules, some big decisions coming out of audits.
Yeah, it's quite a mix. We'll be unpacking that unexpected fallout from the recent 1015 loan regulations first.
The so-called penalty trap.
Exactly. Then we'll look at key announcements from the National Assembly audit, think Prince Group sanctions, the future of stablecoins.
Okay.
And we'll round it off with an update on the BNK leadership race and that looming decision on the Hong Kong ELS fines.
All right, quite the agenda. Let's dive right into that first point, the 1015 regulation shock. It sounds like there was a mad dash just before these rules hit.
Oh, absolutely. A frantic rush is a good way to put it.
Mhm.
We saw this huge spike in people opening minus credit accounts, or
Yeah.
MA tongs.
Why the sudden urgency?
Well, rumors were flying around on social media, whispers about tighter real estate loan rules coming down the pipe.
So people wanted to lock in funds before any new restrictions, potentially for buying houses.
Precisely. And the numbers back it up. Just look at KB Cookman and Homa Bank. In the 3 days right before the announcement, October 13th to 15th,
Yeah.
they issued 91.1 billion won in new MA tong agreements.
91 billion in 3 days. How does that compare to normal?
It's massive. Their daily average before that was around 10.4 billion won. This jumped to 15.2 billion a day. That's a 45.6% increase. Pure preemptive action.
Okay, so people rush in, secure their credit lines, thinking they're being smart. And then comes the twist. The regulation had a sting in its tail.
It really did.
Right.
And this is what's causing the frustration, the penalty trap you mentioned.
Explain that. How does the penalty work?
So the rule says if you have a credit loan over 100 million KRW, you're barred from buying a house for 1 year.
Right. Standard stuff to cool the market, maybe.
But here's the crucial part. It applies to the limit you agreed on, the Kani, not how much you actually used, the Geyu Yera.
Wait, hold on. So if I opened an MA Tong for, say, 110 million won on October 14th, just in case.
Yep.
But I haven't borrowed anything from it yet, I'm still banned from buying a house for a year.
That's exactly it. You're penalized for having the potential access, even if you didn't use a penny.
Wow. That seems counterintuitive. It punishes planning ahead.
It caught a lot of people completely off guard.
Yeah.
Genuine buyers who just wanted some liquidity ready are now stuck. It's an unintended consequence, perhaps, but the impact is very real.
And presumably, this tightening pushes people needing funds elsewhere, especially if standard options like card loans are also shrinking.
You're seeing that already.
Mm.
Our sources show card loan balances, the quick access cash for many, dropped by over 610 billion won in just a month.
That's a huge drop, lowest since late 2022.
Correct. It suggests those easier emergency channels are drying up for regular folks.
So, if MA Tongs are risky and card loans are shrinking, where does that demand go? People still need loans.
It seems to be flowing into areas exempt from some key rules, like the DSR, the debt service ratio, specifically deposit-backed loans.
Loans secured against your own savings.
Exactly. The top 5 banks saw these jump by 29.1 billion, one in just 5 working days in October.
5 days. How much is that relative to before?
It's 43% of the entire increase recorded for the whole previous month, packed into 1 week.
So the concern here is that while trying to cool housing, the policy hits middle class or financially tighter households hardest, right? They might not have large deposits for those other loans.
That's the core worry. It potentially sidelines people who lack significant assets, forcing them into more expensive options or just out of the market entirely. It raises real questions about fairness.
Okay, let's shift gears. From domestic credit tightening to the National Assembly audit. Big policy news came out of that, starting with something international, the Prince Group sanctions.
Yes, this is significant. FSC Chairman Lee Won-jae confirmed they're taking active steps against this Cambodian group.
Why? What's the issue?
They're linked to serious international crime, human trafficking, voice phishing scams. The U.S. and U.K. have already sanctioned them.
And there's a Korean connection, money here.
A substantial amount. 91.2 billion KRW is sitting at local branches of 4 major Korean banks.
Which banks?
KB Cookman holds the largest chunk, about 56.6 billion. Jeonbuk, Woori, and Shinhan have the rest.
And what are the banks doing?
To their credit, they already froze the assets back on the 16th, right after the U.S. and U.K. sanctions hit. The FSC is now working to formally designate the group as restricted for financial transactions.
Okay, moving from that kind of financial restriction to digital assets,
Uh-huh.
stablecoins were also on the agenda at the audit.
Yes, outlining the next phase for virtual asset rules.
Mm.
The focus was on Korean won-denominated stablecoins.
Are they going to be allowed? How will it work?
The plan is yes, but under a pretty controlled model. It has to be a consortium led by banks.
Bank-led. Can others participate? Fintechs. Big companies.
They can be part of it, yeah, but banks maintain the oversight. And here's the key rule.
What's that?
No interest payments allowed on these stablecoins. Zero.
No interest. Why is that so important?
It stops them becoming, quasi-savings accounts or speculative investments. The idea is they function purely as a stable digital fund. One for payments, not for chasing yield. It aligns with global standards while allowing some innovation.
Sticking with policy debates from the audit, there was some heat over the bad bank plan, the new LEAP fund, the one meant to buy up bad debt.
There was. Specifically criticism about how well it was planned, or perhaps how poorly.
What went wrong?
Well, the top lenders are cooperating, which is good. But the initial estimate of how much bad debt could actually be sold to this fund, it was way off.
How far off?
Officials first estimated about 2.3 trillion won worth of debt. The actual volume now is closer to 6.7 trillion won.
Wow, that's nearly 3 times higher. 4.4 trillion won difference.
Exactly. Critics jumped on it, calling the planning sloppy or rushed. It suggests a potential misunderstanding of just how much financial distress is out there, especially among lower-income groups. Now they have to scramble to figure out the funding.
A major miscalculation. Okay, let's move to our final section. Upcoming decisions. First, the BNK Financial Group CEO selection. Why is this particular appointment getting attention?
Because it's seen as a test case for new governance guidelines, the model practice, designed to prevent parachute appointments.
You mean politically connected C-suite hires?
Exactly, or just sudden outside appointments without proper vetting. BNK is following this new model very carefully.
How does the model try to stop that?
It requires things like maintaining a permanent pool of potential candidates, using external recommendations, ensuring a structured process over time.
So what's the timeline for BNK?
They're finalizing a long list of about 20 names this week that gets cut to a short list of 5 by mid-November, with the final pick in December.
And the vetting is tough. Supposedly very tough, looking for deep regional finance knowledge, leadership, communication skills, and critically, checking for any past regulatory sanctions or misconduct issues. Accountability is key.
All right, last item. The Hong Kong ELS situation. Huge losses for investors. And now the FSS, the regulator, is about to act.
Yes, the Financial Supervisory Service is holding a sanctions review committee very soon, on the 23rd. They're looking at fines for how these ELS products were sold.
Why the rush now?
Some potential violations, like failing to properly record the sales process, are apparently nearing their 5-year statute of limitations. So they need to move on those cases quickly.
The banks involved have already paid out a lot in compensation, haven't they? Over 1 trillion won.
They have about 1.3 trillion KRW in voluntary compensation. And they're hoping that counts for something.
How so?
Well, there's a new rule from the Financial Services Commission that allows for up to a 75% reduction in punitive fines if firms proactively compensated customers.
So banks are hoping for a big discount on the fines. They're definitely hoping. But there's also significant anxiety.
Why is that?
Because the new FSS governor has been very vocal about strengthening consumer protection. There's a real fear he might use this case to make an example, to send a strong message.
So potentially ignore the compensation efforts and impose heavy fines anyway.
It's possible
Yeah.
to really underline the commitment to consumers. So it's this tense moment. Will the regulator show leniency due to the compensation, or will they prioritize making a strong statement?
A huge amount hangs in the balance. That 75% reduction versus a full fine is potentially billions of won, and it sets a precedent for the whole industry.
Absolutely. Everyone's waiting to see how the FSS balances punishment with the bank's mitigation efforts. It's the final major piece of this ELS saga.
Well, that certainly covers a lot of ground from the squeeze in the credit market and that Tong penalty through major policy calls on sanctions and crypto, right up to these critical leadership and regulatory decisions.
We hope breaking it down like this helps you connect those headlines to the real-world financial dynamics.
So that wraps up our look at the financial markets and key policy shifts today.
Thanks for tuning in.
We'll be back soon with more updates. For the Seoul Economic Daily, this has been The Deep Dive. Thanks for listening.
Goodbye.